Hello and welcome to another update video about Ethereum. So here on the Ethereum chart, we're still tracking a potential fifth wave to the downside after wave 4 might have indeed formed a top in an ending diagonal here on the 24th of March. I mentioned to you that the bullish potential, while possible, really has a lot of problems, and the move to the upside is not clearly a 5-wave move, and yesterday's price action kind of confirms that, but the price has so far avoided to break below recent lows. So also, I mentioned in the Bitcoin video, I would not really put too much weight on yesterday's move. We had a strong catalyst about the tariffs or related to the tariffs, so of course there's a lot of volatility there as well. We don't necessarily have a clear outcome yet whether the bulls or the bears are really winning, but the move to the downside is too deep to be part of a bullish scenario, a directly bullish scenario. Again, it's possible still, nothing's invalidated, but the strength of the decline, the momentum suggests that this could have been wave 1 of a C wave to the downside. So I wanna talk to you about the parameters that I think are relevant for today and maybe over the next few sessions. This is an analysis of the shorter time frame from an Elliott wave point of view. Yesterday I covered the daily chart as well, but in this video I just want to cover the shorter time frame. And what you can see is that the market has obviously started this fifth wave to the downside potentially already around the 24th of March. I mean, it is possible that this here is some kind of a low, but I would not... I mean, there is just no strong evidence that it is. The bulls had a chance. This year looked a bit like a 5-wave move up, but the bulls failed to hold Fibonacci support. So I've replaced Fibonacci support by resistance because the break of Fibonacci support would rather suggest that the bears are trying to take the lead. So in this yellow scenario, the market could now have started the C-wave decline in wave 5. So if you're wondering why would why would a wave 5 be an ABC structure? That's because the entire move down seems to be an ending diagonal here, highlighted in yellow. So the thesis would be that the next bounce could be a wave 2, at least as long as we're holding below micro resistance. So it's always important to understand what are the parameters that allow us to take a different stance. So for example, if we now see a break above resistance, it would mean that we have to change perspective towards or in favor of something more directly bullish. And any break, as I said, above 1915 would make us do that, because the wave 2 shouldn't really break above the 78.6 retracement. It just shouldn't. That's very important because, there are certain areas, you could say the Fibonacci levels, they are mathematical representations of market sentiment. So if we see a break above one of these levels, it indicates that, for example, if it's a break above resistance, the bulls are trying to take the lead. Yesterday we had a break below micro support. Again, that's only here on the smallest time frame, so you have to be very adaptable. If that's all too fast for you, it can make sense to maybe move up a time frame or 2 time frames, because at the moment, it's always the case. When we're dealing with still ongoing corrections or potential trend reversal areas, there are multiple attempts the market has to make for reversals, to carry out a reversal. So far, these attempts haven't been successful. The bulls haven't been successful, and the price pattern, in my opinion, still screams for another low. So I've sketched out here the micro pathway to, let's say, below 1725. And if over the coming sessions the market cannot reclaim 1915, it becomes more and more probable that a third wave should take us below 1725, 1666, maybe even 1644. That's the 100% extension of the A wave to the downside. Now, what can always happen is that the B wave is simply extending. That is why we need 5 waves up, 3 waves down for a solid trend reversal. We haven't had that for quite some time. Always watching for it, but I can always say here, this might be just alternative B. You have to be ready for that, because just to break above resistance doesn't necessarily make it bullish. It needs 5 waves up, and 3 waves down. Because what would happen here if we break above initial resistance, it could just be the A wave, the B wave, the C wave. And if we then see a 5-wave decline, well, then it would just send us down a little later. That's the mess we're dealing with when we're dealing with corrective structures. So that's why I always say, as long as we don't have 5 waves, this is very, very choppy. We don't have a stable structure. We have to be flexible, adaptable. So these are the 2, let's say, pathways that I'm watching. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.